Welcome to this presentation about return on investment in instructional design. Let's click the red Begin button to get started. In order to win a national championship, a lot of time and sweat must be invested. In order to win at Wimbledon, athletes invest money in equipment and hours of exercise and practice. To be successful in business and training, money is invested in equipment, software, manpower, focus groups, research, designing, developing, assessing, evaluating, and so much more. Return on investment is the ability to account for all money, time, and work put into the development, purchase, or acquisition of a business or educational related endeavor and weigh it all against success factors such as improved profits, growth, and marketing. Reiser and Dempsey, 2017, page 97 states, the concept of ROI to measure the success of investment opportunities has been used in business for centuries to measure the return on capital expenditures such as buildings, equipment, or tools. After this presentation, learners will be able to define return on investment in business, explain return on investment in instructional design, describe the 5-level ROI evaluation framework, and calculate return on investment. Let's click Next to continue. Return on investment is an outcome to explain the profitability of an investment. ROI weighs the value between what was invested versus how much was earned to demonstrate financial performance. Fernando 2022 defines return on investment, ROI,
as the performance measure used to evaluate the efficiency or profitability of an investment or compare the efficiency of a number of different investments. ROI tries to directly measure the amount of return on a particular investment, relative to the investment's cost.
Let's click Next to continue. Investopedia 2010 provides an engaging and in-depth explanation of ROI. Let's take a moment to see Investopedia's visually engaging explanation on return of investment.
ROI helps investors evaluate the performance of an investment and compare it to the performance of their other investments. School's out for summer, and Joe's children ask for some startup cash for their respective summer businesses. Joe gives each child $100. In return, they must split their profits 50-50 with Joe at the end of the summer. Joe's daughter opens a lemonade stand. Joe's son buys a lawnmower. As the summer progresses, the children work hard at their businesses. Joe's daughter sells many cups of lemonade, and his son mows every lawn in the neighborhood. At the end of the summer, Joe's son has earned $500. Joe receives $250. Subtracting his original investment of $100, Joe is left with $150 profit, an impressive 150% return on investment. Joe's daughter has earned $1,000. Joe receives $500, minus the $100 original investment, and that's $400 profit, a whopping 400% ROI. Joe earned $4 for every $1 he invested. Joe's daughter provided the best ROI. ROI is one of many measures that help investors evaluate investments.
In summary, ROI prioritizes the need for organizations to weigh profits versus expenses and determine the value proposition. If the program, services, or training drives improvements and profits, then there is a positive return on investment. If losses are identified, updates to the program, service, or training need to be updated and improved to drive higher performance outcomes or profits. Moreover, investing in ongoing learning and development improves employee proficiency, production, and retention. Employees are motivated when businesses focus on employee engagement and learning. If done well, employees' competency and enthusiasm drive production and quality services with positive return on investment. ROI is also used in education and training. It is used to validate the effectiveness and efficiency of instructional design and the time and tools used to develop instructional material. Let's click Next to learn more. ROI, or ROII, return on instructional investment, takes a deeper look into the effectiveness and efficiency in instructional design, learning and development, and competency and proficiency in effort to increase the employee and organizational value. Value equals growth and profitability for the organization. In the world of training, it defines how effective was the knowledge transfer and behavior. In the world of training, it defines how effective was the knowledge transfer and the behavior change. NAP 2018 shares
the proposed return on instructional investment (ROII) model allows schools to evaluate investment opportunities based on their costs and associated benefits, often dubbed cost-benefit analysis in the business industry. The ROI model creates a transparent, objective methodology for ranking various instructional program investments. It allows school leaders to identify investments with the best bang for the buck, in which the buck is often limited in the school setting, based on funding restrictions and guidelines. This model will aid educational institutions with their approach to major investments.
This means if there is positive return on investment, such as improved performance outcomes, customer loyalty, and employee retention, the training and delivery is successful. If improved outcomes are not occurring, data can drive more informed improvements using the 5 points for collecting metrics from Kirkpatrick model of evaluation. Let's click each number tab to learn about each level. Reaction is measured by taken feedback from learners. It answers, did the learners like the training? Learning can be easily measured through scoring patterns at the end of course assessments. It answers, what did the associates learn? Behavioral changes are certainly more difficult to assess. Use a combination of techniques to assess how much of the newly acquired learning is being applied on the job. This answers, did the associate apply the new skills? Business impact is generally measured through productivity gains, impact on quality measures through reduction in reworks, and getting a higher number of work assets right the first time. This answers, what is the business impact? ROI is normally calculated by converting the business impact gains to a monetary value. Did the training outcomes increase output performance metrics and company profitability, or was there a loss? The ROI is calculated by subtracting the total expenses from the total revenue, then taking that solution and dividing it by the total cost. Finally, you multiply it by 100. This allows training and organizational leaders to determine which trainings are making the biggest impact and are driving the biggest revenue, and which training requires updates in order to hit key performance targets. Investopedia 2022 shares,
current value of investment refers to the proceeds obtained from the sale of the investment of interest. Because ROI is measured as a percentage, it can be easily compared with returns from other investments, allowing one to measure a variety of types of investments against one another.
Let's take a look on how to calculate ROI. In summary, the training was a win and rendered positive ROI and led to reduced risks, costs, and injury. The Kirkpatrick model of evaluation is a useful resource for collecting data necessary to evaluate the return on investment in instructional design and training delivery. In conclusion, Kirkpatrick's model of evaluation, if applied correctly, allows training leaders to make learning and development in education a profit center, not a cost center.